BFSI colleges. He is a speaker with FM radio channel and columnist with newspapers on financial awareness and personal finance plannings. He is also a mentor on financial management for senior citizen for HelpAge India. Earlier in his banking career, spanning 19 years, he has headed IndusInd Bank as a vice president, retail banking and wealth services. Then, as his assistant general manager, AGM in Lakshmi Vilas Bank, where he used to look after credit marketing for North India. Early, he used to serve other big bank like ICICI, HDFC also as a branch manager, different leading branches in Delhi. So over to you, Professor Bhaduri.
Thank you very much, Manish. And thank you all the Rotarians here to be inviting me in this August gathering. I am really privileged to be addressing you today on financial awareness programs. I don't think so. If instead of Manish, if I would have given my introduction myself, I don't know. I would not have been able to give this much. He has read I don't know how many pages of my introduction. Really, I am not worth that much what he said here. Yes, right now I am a visiting faculty at University of Delhi. I teach money. And I teach money means I teach the subject which everybody wants in your pocket. Everybody wants them everywhere. So today in this session, I'll be talking about financial awarenesses. I will be talking about how do you hire a financial advisor for yourself. Now that becomes a pretty important point. How do you hire a financial advisor for yourself? What are the qualities you should be looking into him for hiring a financial advisor who could act, add to whatever you are doing and not just be somebody who is selling a product to you. Followed by this, we will try and do some question answer sessions so that any of the members here who want to ask me a question about something in finance, some things which maybe if I know a little bit of it, I'll be happy to be answering them. So allow me a small time so that I can start with my presentation. I would not like to do a completely presentation on the PowerPoints and go by that, though I will take some help from the PowerPoint, and I will request everybody of you to unmute yourself and speak to me while I am actually taking a session, because in my class also what happens is I always tell that please unmute yourself, keep speaking to me so that I understand that you are there in front of me and you are asking me questions, and that gives me a lot of leeway, that it allows me to be connected with you people. So thank you very much. Arundhati, please unmute yourself. Yeah, if you make me the presenter, then I'll start sharing my screen also.
Yeah, I've already made you a co-host. You can go ahead.
Thank you. So what is financial awareness? I'll say the most important financial part of financial awareness is to stop guessing and start knowing. So a very important part of any kind of a thing is to know and have the knowledge, sit with the people who are better in this subject. That makes it a position, that makes you into a position whereby you are able to learn and many a times unlearn something and relearn. So three things which I've said is learn, unlearn, and relearn. So that is a part of the journey which we will try to take it from here. And let's go get started. All my presentations, I start with this slide of mine. This is Warren Buffett, very easily recognizable figure. And one thing of this man is this slide, which has always inspired me, which says that if you don't find a way to make money while you sleep, you will work till you die. Now that has got a extremely high amount of knowledge, which is here in this one slide, which is talking about you have to make money while you are sleeping. Now, how do we make money while we are sleeping? Very difficult. I am sleeping. In other words, he wants to communicate that the money starts working for us while we are not working for it. So how do we put our money to work whereby even if we are not working, it is working? So let's talk about some investments. Let us say that I have put a money into a bank FD, and the bank has given that money into somebody as a loan, and that person who has taken a loan is working hard to repay the loan, and I am enjoying a fixed interest out of it. So this is one way of investing. You can change the way of investing by saying, okay, let me be now, instead of giving a loan to a bank and get a fixed return, I start enjoying the higher return by investing in somebody else's businesses. So you can invest in somebody else's business by buying the shares, by directly investing into the invest, or looking into some kind of an indirect way like a mutual fund to invest. So I think that most of you have already been doing it. So let's try and find out today what are the things which might be something which we are doing it wrong. So this is one important slide. I hope my slide is visible to all of you.
Yes.
Yes,
Yes,
yes.
yes.
And this is talking about India's financial literacy. And let's look point by point to find out, maybe we are also one of them, and maybe we are on to the wrong side also. Let's look into it. I will be explaining one by one point, and I will be expecting some answers from you, you people also, to tell me that yes, I had been thinking like this, or maybe I was not thinking like this, and what should I be doing if I had been thinking like this, and how do we change it? So let's go ahead. 67% of Indians think buying an insurance policy is buying an investment. 67% of Indians think buying an insurance policy is buying an investment. So most of the time, we people have been relying on buying or getting an insurance policy for our future retirement products. Now, 67% of Indians, let's assume that out of 135 crores, let's leave aside the 35 crores and have 100 crores in front of us. So in this 100 crore people, 67 crore people think buying an insurance means they have bought an investment. And our insurance companies for the last 50 years have been able to market it the best of the way to make the smallest of the people, I am not saying the smallest of the people in any other way, but the financial independence is the smallest of the people. So a person who is the bottom of this pyramid, now this person is also made to believe that if he has purchased an insurance policy, he has actually bought an investment. Let's do a survey among us. How many of us think that insurance buying, and they have purchased insurance thinking that this is an investment? Come on, let's.
This is an expenditure. This is an expenditure. Insurance.
Yeah, insurance is not an investment. It should be taken as an expenditure, and you should not be looking into any kind of a return. That is the best policy. That means you have shifted your life's risk or any other risk like your car's risk to somebody, you buy it again the next year. That should be the way of investing. There are other better ways of investing also, which I speak to my clients. We will come to those things later on. But let's understand this thing that we are trying to run. And we have tied two laces of our shoes together. Will we be able to run? Now let's assume like this: one shoe is the insurance and the second shoe is the investment. And we have tied it thinking that it is the same thing. Will we ever be able to run quickly? No, we will not be able to run quickly. So the first and the foremost thing of financial awareness is to de-link the insurance from investment part. And let's keep two different things. Whatever insurance I need, I will do it through the insurance. Whatever investments I do, I will do it through the investment products and not try to combine them together. So if I need an insurance, let my feet with the insurance shoe be down. And if I am running and I don't need an insurance, I need an investment, let the other shoe work hard. So that is where I try to say that 67% of Indians have been doing it wrong. And financial advisors, the financial advisors are more today like a mutual fund distributor or an agent of an insurance, but there had hardly been any financial advisors who have actually correctly taken this thing for the clients. We need to be changing this. This is the first point. If we have been doing it, try and speak to your financial advisors how and what best you can be doing to change this. Next point is 90.
I have a question on this.
Yeah, sir.
Bhaduri.
Sir.
Okay, agreed. Investment. I'm sorry, insurance is not an investment. But suppose you do take out a big insurance, say
Yeah.
for 1 crore. Let's take a value.
Yeah.
So you take it out today, and for that you're paying a premium of say about, I don't know, whatever, say about 1 lakh or depending on your age or 2 lakhs per annum.
Yeah.
So I pay a 2 lakh premium today, and say within the next 6 months or so I pass away.
Correct.
Isn't that an investment then?
Yeah. So the probability of passing out is so less that insurance companies sell it as a product. So what we need to be doing is, suppose we have got 1 crore rupees of an investment is what we are looking at, plus 1 crore rupees of an insurance also we are looking at. So if what we should do is, whatever money we want to invest, for example, here you have invested 1 lakh rupees for an insurance policy, insurance premium policy, and you have been investing some amount for your investments also outside. We need to de-link this thing. So what happens is, in case you have got 1 lakh rupees a year to be invested in, put 20,000 rupees for buying a term insurance policy and the balance amount towards your investments. So your term insurance policy is that shoe which will be down in case of a death. And in case there is no death for over say 20 years, 30 years, your insurance period is over, you would have lost 20,000 rupees per year for the next 10 years or 20 or 30 years even. So 6 lakhs. But what we have gained is both sides. That means in case of a death, your investments did not work for you, but you got the money from the insurance company. And in case of no death, your returns are high because of the investments, and you did not need the insurance, and you say, thank you very much, God, I did not need the insurance and I am happy. So in both cases, you have got a plan A and a plan B ready. In case you are doing only an insurance, you are not getting a return which are mutual fund or direct investment into stocks or any other kind of an investment would have done it for you. And you would have got a very less insurance policy. So what is the law? The law says that your insurance premium can only be 10 times of the or I'll say that your insurance amount, which is sum assured, is only 10 times of your premium paid. So if you're paying 1 lakh rupees in an investment product of insurance, your sum assurance is going to be 1 lakh. So what you need to do, you need to buy a term insurance, pay a very, very small amount. And I will rather say take a term insurance for your life and don't take it till 60 or 65 or so. Take a term insurance till you are 85. Now, probability of a death for at 85 or before 85 is nearly 90%. So in any case, the amount will be received. So till 60 or 65, let you pay the premiums. At 65, hand over this policy to your son and let him pay it as a debt investment, because he knows that he is going to get that 1 crore rupees by paying for only next 20 years, 65 to 85 when my father passes away. So 65 to 85, he has paid only 20,000 rupees for, say 20,000 rupees per year for 20 years. So he has paid 4 lakhs and his sum assured is of 1 crore, higher return than a mutual fund in any case. So you need to be talking to your financial advisors on these aspects, and they should be educating you on these aspects. Then only he is a financial advisor. Otherwise, he is simply an agent who is only looking into selling a small product to you, get the commissions. Now, why am I saying this? Insurance ke upar, are you also happy with if I take some lines in Hindi? No?
No problem.
No problem.
No issues.
Thank you so much, sir. So a commission which an agent earns on your insurance is 33%. Why will he try to sell you any other product? And a commission, brokerage commission for a term insurance policy is 3%. So he will never like to sell you a good product. Now here, if your financial advisor is there, he is going to earn money out of the financial investments you are doing. Hence, he will be okay with you doing a 3% product and be safe. So that is why you need to hire a good financial advisor and not just an agent who is just trying to sell you a product. Am I clear to you, sir? Am I clear?
One question.
Yeah, there's a question. Yeah.
Yeah, please go ahead, sir.
Question is, what about health insurance? I mean, is it a expenditure or would you call it an investment? Because if you're sick, you then need money. So,
sir, if I go by the term of definition, then no insurance is an investment. See, in what do we look into? And in the term definition of investments means I am going to earn a return out of it.
okay.
So that is the pure definition of investment. So let's not talk about investment in a health insurance. Let's say, do we need a health insurance or not? So I will say, yes, it is a sure expenditure on you, but this is a compulsory expenditure which we will have to live with. Today in our life, it is a sure expenditure to have a car, but we have to live with it. We can't really say that I will live in a jungle and travel in a bus. So it is an expenditure which you need to spend. Now, let me take it in another way, sir. Suppose you are paying, say, 25,000 rupees for a family insurance, a health protection for you, your 1 child or 2 children, and yourself, and you are about 45 to 50 years of age, and the insurance amount is about 5 lakhs. There are better products available whereby you can buy 2 insurance policies. The second policy starts from not 0 to 5 lakhs, but starts from 5 lakh and 1 to 10 lakhs. And because you have already paid the 0 to 5 lakhs premium for one company, the second will only start kicking in from 5 lakh and 1. So it is just like having 2 credit cards in your pocket. you use the first credit card fully, exhaust the limit and start with the second. But second, because it starts from 5 lakh and 1, the premium is less than half of what you are paying in the first policy, because they know that they are not going to pay for the first 5 lakh rupees. Hence the policy premium is less, and 90% cases we will not require more than 5 lakh rupees. So it is very prudent to have a policy which is 2 policies, one for 5 lakh, second starts from 5 lakh and 1 to whatever it is required. Now, assuming that I don't have a second policy, I have got only one policy and I am paying 25,000 rupees per year for the for an amount of 5 lakh rupees, and there are 4 people in my home who are covered. So let's see that first year nothing happened, second year nothing happened, 10 years nothing happens. So how much did I spend but not take? I spent 2,50,000, but nothing happened to me. Now on the 11th year, any one member of my family is sick. So A, husband, B, wife, C, 2 children, C and D, 2 children. Any one of them is sick, and I have to this time spend, say, 3 lakhs or 5 lakhs. In that case, I would have made the money which I have paid through the premiums. Now, suppose that next 10 years also nothing happens. In that case, I should be thankful to the God that by paying 5 lakh rupees, my 4 people in my home have been safe for 20 years. So you call it an expenditure or you call it a donation to the government, to God, I will take both.
Okay.
Coming back to that insurance policy of 1 to say 5 lakhs and then 5 lakhs upward.
Yeah.
Could you explain that once? Is it with the same company?
It can be with the same company also. So you are buying 2 policies. That policy is called the add-on. So your financial advisor would be knowing this thing. So what happens is you first of all buy a policy which is 0 to 1 rupee to 5 lakh rupees, which is called a family floater. So anybody in your family can be treated with that policy up to 5 lakh rupees. Now, next thing is you buy another one policy, which will be nearly half the premium of what you have paid for the first 5 lakh rupees. And it will start from 5 lakh 1 rupee to say another 5 lakh rupees, which is still 10 lakh rupees. Now, what happens
No,
is,
but my question is not that.
Yeah.
That extra one that you're taking will only kick in after 5 years.
no, not kick in after 5 years. It will kick in after you have spent the first 5 lakh.
Okay. It's got nothing to do with the time.
No. It starts from day one.
Sorry. Okay, my
only
mistake.
if the
the
expenditure is more than 5 lakhs.
That's an add-on. Yeah. Okay.
It's an add-on.
Yeah.
So, any questions on insurance, sir? Anybody? Ma'am, anything from the insurance side? I understand that it is always the husbands who generally do the financial planning setup, but it will be good that you are the leaders in this club. It will be good that the ladies take over some of these things from in the family and add a hand. So 1 + 1 is not 2. 1 + 1 becomes 11.
Yeah, there's one question from GB. He has raised his hand. GB,
Go
please
ahead.
Yeah, good evening, everyone.
Hi, good evening.
Mr. Bhaduri, I wanted to ask, what is your thought about limited pay option and a whole life term policy?
I will, what I said in the beginning is, today, if I have to advise my client, I will be saying the whole life policy.
Yes,
So
till
what did
100.
I say? What did I say?
No, with a limited pay option, is it
No,
wiser to
never
go
a
for
limited pay option. Never. No. It is
Okay.
so very expensive. You should pay the whole period. That means, suppose I pay for my period is a limited option is say 7 years. I pay off in 7 years and I am covered for my whole life. In
I
any case, I have
understand.
paid the premium. Suppose I passed out, I am no more at 10th year. I would have paid everything to the company. And
Right.
in case I am buying 1 by 1 every year, I would have paid only till 10th year and got the same money. So why should I pay the whole life's at today's price
There's
and
another-
get it at tomorrow's value?
There's another perspective which I feel, life has its ups and downs. So generally, it's not necessary that any premium which you have on a term policy, you'll be able to continue, say, for 40 years.
Sir, the term policy, what I will say is term policies are very, very, very least expensive products.
Mhm.
Now, for a term policy of say 1 crore rupees, a person has to pay about 35,000. If he had taken the policy at a earlier age, it would have been much lesser.
Agreed.
In my case, I am telling you, I am paying a policy of 75 lakhs and I am paying 17,000.
Okay.
Now, if I say that I will not be able to pay 17,000 at the age of 60 years,
Mhm.
then I am into a serious trouble.
Okay, fine, fair enough. Thank you.
So,
Okay, but if the term policy, back to that.
Yeah.
I know maybe my earnings, say I'm taking a policy at a later age, and I know my earning is only up to that many years more of service. So isn't it that time beneficial to take a term policy so that, I mean, what do you call that? Not term policy, this shortened paid, what, that was the word.
yeah. Please go ahead.
Limited
Yeah.
pay. Limited.
Limited,
Yeah,
limited
that
period.
limited. So isn't that sensible then? Because you know, after that, you won't be able to pay that kind of.
No, sir, I will still disagree because I am sitting in the class of people here who have got who are sitting. If it was not for Kolkata temperature now and it would have been June month in Kolkata, you would have been sitting in an air conditioned room. So paying 17 to 20 to 30 to 40,000 rupees in a year, if it is very difficult, then we will not be able to maintain a car even. We have to be practical in our thoughts. And that is where the financial advisor should kick in. See, if we are not able to, if we are thinking that my earnings are going to be limited at 60 years or 65 years, and I will not be able to pay or service my premium at 40,000 rupees a year, I don't think so we will be able to even afford a car or perhaps even a laptop with a internet connection. It is going to cost us about 500 rupees, 1,000 rupees a month. So that is still 12,000 rupees.
Yep.
So what I will in my session will also say that you should invest today in a manner that you should be about 1 crore rupees or 2 crore rupees by the time you decide to hang your boots. Now, why am I saying 1 crore rupees or 2 crore rupees? Is because as a financial advisor, I will be able to make 6,000 rupees for every 10 lakh rupees you invest in without touching your capital. In fact, giving you some amount of cushion on the capital plus something extra also. So as a financial advisor, they will be able to make 60,000 rupees for every 1 crore rupees every month. So if you are made 1 crore rupees, 60,000 rupees of a pension without losing your capital is possible. So
I can move on to the next point.
yeah, thank you so much, sir. So 93% of Indians think gold is an investment and gold is not an investment. Now, why did we people think that gold is an investment? Is because once 1947 India Pakistan got divided, that is the time when people came to from other side to Indian side or Indian side to the other side. They had to carry the gold. So gold is an hedge and it is not an investment. Unfortunately, we have been taking it to hide our black monies, and now there will be no black monies. So this is also not an investment. Return should overcome inflation. What does this mean exactly? Only 2% of Indians have been able to answer this thing. So remember, if you are putting your money into a bank FD, then you are not able to cover up the inflation part even. This is a problem. Most of the time, the bankers, the government, everybody has made us to believe that it is the safest investment. But safest means the capital is safe. But safest does not mean that it is also higher on the inflation. That means you are earning more than the inflation. It is not there. They never talk about it. Add to that, interest income on an FD is taxable at the highest slab of yours income, and an accrued income is also taxed. But if you put the same money into a mutual fund, you are taxed only at 10%. And first 1 lakh rupees is still not taxed. And some money which you don't withdraw is never taxed. So here I always talk about one thing. There is a golden rule. A man who has the gold make the rules. And you know who make the rules, the rich people in the parliament. So they have made their own rules which suit them because they don't need the money, and they make us struggle for all the interest which we want. Yes, 22% of Indians think that mutual fund SIP is the name of a scheme. That is how bad it is. Financial advisors or the distributors have gone saying that do a SIP in a mutual fund, and 22% think that it is a scheme. It is so much that LIC of India has, because people wanted SIP, so they have come out with a SEEP. It is as bad as that. 88% of Indians do not know what is asset allocation. I don't think so many of us sitting here also understand what is an asset allocation. So asset allocations means I am not going to put all money into a single basket. I am going to put my money into different baskets, allocate 10% into this, 20% into this, 25% into it, so that at an overall things, I am able to get about 6% higher than my risk-free return. Yes, sir, I see a hand.
Right. On the gold part, so historically the gold returns have been around 10 to 11% on a long-term basis.
No,
And,
less than that, sir.
and
Gold is not 10 to 11%. The gold, if you look into 100 years kind of a thing, the gold will be about 6%, 7%, not
right, and
10, 11%.
right now there was RBI gold bond, which was also offering another 2.5% of interest, right? So
Correct.
if I take that and the return of even say 6 or 7%, it comes to 9.5%. So in that case, it is not bad return.
If you say, yeah, I want to take it like that and invest and not have liquidity in my portfolio, then I will say go ahead and do it, sir. It's not as bad than buying gold in a jewelry form or in a penny in a guinea form and keeping it into your locker. It is not at least as bad. At least it is good for the economy.
Yeah, the ETF only, the RBI gold
No,
bonds.
it is not called ETF. It is called the sovereign gold bonds.
Yeah, sovereign gold bonds.
Not ETF.
2.5% one.
ETF
Yeah.
is different. So it is not as bad. You are getting 2.5% return, but your money is logged for 8 years.
Right.
So even if you need the money, you don't get the money. That is the biggest problem. You need money because you need to be hospitalized, but you cannot get the money because your time of 8 years have not passed. So it is as bad as that. You have the money, but you can't take the money.
But also this 2.5% is also again not taxable, right? So
Yes,
if I have
2.5% is non-taxable, sir.
Right.
So do we really want a non-taxable 2.5%? I don't think so. I'll better get a 12% and be taxed. I'll be happy to get a 12% and be taxed at 10%.
So,
What can we expect from the budget?
we come to that later. Navneet, can we come to that later? Let him run through his points.
Yes.
Thank you, sir. Yeah, 88% of the Indians do not know what is asset allocation. 63% of the people consider investment in mutual fund is just like buying an insurance policy. 92% people after their retirement depend on their children. Now, this is the biggest and the worst of the point, which I feel very sorry to be reading this, but this is the fact. 92% of the people after their retirement depend on their children. And the problem age, we will be the first generation who will not be covered by the government policies of pension. If we look into my side, I will see my parents had been covered with government pensions. If you look into your side, you will find your parents have been working with the government or the state government or the central government. My father and my mother both had been working with the central government. So my mother enjoyed her pension till June this year, when she passed away at the age of 78. My father was a little unlucky. He could survive only till 46, but my mother carried his pension till she was 78. But if we think about ourselves, that is not the case. Governments have already said that we are not going to take part in the pension schemes. So 92% people were in any case previously dependent. Now this scenario is only going to get bad. Of the 8% people who retire, who plan their retirement, 61% of them have done it through the LIC or insurance policies. Now that is as bad as that. So we need to look into this thing and take necessary corrective actions. Yeah, anybody want to ask me any question here on this? No, I go ahead. Yeah, only 0.042% people are aware about complete financial planning. Now, if we look into 100 crore people, it will be a minuscule of 0.042%. Hardly any people. So they only less than 5 lakh people understand that there is a financial planning is needed. What is complete awareness about financial planning? And we have been doing our financial planning ourselves. Now, this is the biggest of the issues. We don't know about financial planning, but we start managing our own money thinking that I am the best manager of my own money. Only 5% of Indians have got health insurance. We talked in length about health insurance in our today's session, but only 5% of the people understand what is a health insurance, as they have taken a health insurance for themselves. So this is our biggest worry. And if I say that let's take it to our own lives, we will find that at least 3 to 4 of the points we were wrong before this session. Okay, so I'll take you forward quickly and just go to Manish has just told me that I've got very less time left, and I will be quickly going into the next slides. So LIC, Provident Fund, Bank FD or mutual fund. Are you guarded against old age poverty? Is it not an old age poverty if you start doing an investment in a provident fund or a LIC or a bank FD at a younger age and think that this is going to take care of it? So how does it work? Let's look into this. Equity fund is taxed at long-term equity fund is called 1 year and more is called a long-term equity. So short-term in equity is less than 1 year. And a long-term equity is taxed at the rate of 10% after first 1 lakh rupees. A short-term fund is taxed at the rate of 15%, which is less than 1 year. That means your profits are taxed. So if I say that if you invest something and do not take out any money, in that case, you have not been taxed ever in your life. So this is an important thing which we need to look. A debt fund is a long-term fund, is 3 years. A long-term fund in a debt fund is about 3 years. A short-term is less than 3 years. A less than 3-year debt fund will be taxed like your bank FD. But long-term fund will not be taxed as your bank FD. So it will be giving you, first of all, the cost of holding period. So indexation benefits will be coming in. you should speak to your financial advisor, say that what is the meaning of indexation. That indexation means, yeah, it is going to pull over the investment time where you invested to today's value and then calculate the profit and be taxed. And again, the taxation is just 20% and not the 30% which you pay in a bank FD. So very important points. So if you are looking into something which is a tax efficient products, you should look into these as a product instead of these new generation products, and not get into something which is taxed at a very higher level. Those are inefficient products. Any questions here, sir?
I think Rishabh ji has some question, Rishabh Bhatia ji. So he has raised his hand. So over to you, Rishabh ji.
Done. That was on gold bond.
Okay.
Yeah. Now, what is the kind of a return we should be looking into? Insurance policy generally gives you a 6% kind of a return. Remember that whenever you take an insurance policy, they tell you that there is a page which you need to sign, and that page is called the illustration page. So they make you sign that illustration page, and they make you sign on the 6% illustration page. Now the law is very simple. The law says an insurance company cannot give you a return which is less than 4% and higher than 8%. The law is saying the mutual fund is not going to give you a return less than 4% and higher than 8%. So in case the mutual fund has to give you 8% and above, that profit cannot be given because of the law. That money is collected and put into the mutual insurance company's product. The insurance policy law is saying that. I said, I think mutual fund. It is insurance company's law which says this. Insurance laws, the IRDA laws categorically talks about a return which is 4% to 8% only. Now, what is the good thing? Tax-free maturity, it is safe, and life cover is there. And what is the negatives about it? Very low return, low cover. Life cover is there even if you do not want it. A very, very long-term investment, 20 years. So you cannot come out of the insurance policy if you have signed a policy for 20 years. You cannot come out of it without getting scars.
Yeah,
Next.
I
Yes.
have one question on this.
Stop.
What about a single unmarried person? Is life insurance a good scheme to invest? Okay, it's not an investment, okay, to take a policy.
Sir, if he has got his parents to support, then yes, it is important. If he does not have his parents also to support, then he should never look into insurance as anything for himself. He does not require it.
So if then what is this thing about insurance policy, which we call as a paid up policy after 5 years or whatever the term is? So what happens to that money?
No, it is simply you have made an investment in an insurance company. You have paid up the money before you passed away, and you are keeping that money. There is no point of a single person, unmarried person does not have any dependent to have an insurance policy.
No, what I'm saying is that that money remains till the policy matures. Is that correct?
Correct. And after the policy matures, the principal amount plus the returns are given to the person who is unmarried but has survived the policy period.
Okay, so basically the base question was for a single person, it doesn't make sense if he or she has other kinds of, does not have any other, like you said, parents or anything to take care of. It doesn't make sense to invest in, to put in money in LIC.
Perfectly fine, sir. And I will better say this person should do a lot of charity and put the money into mutual funds so that he can earn more and give more.
Thank you. Okay. Yeah, sorry, yeah, go ahead.
So if we look into Provident Fund, when I made this slide, it was 7.6%. Today it is down even. So Provident Fund rates are coming down, down, down. And thank you very much for Jetli, who has done it. And he has gone abroad, but he has given us this thing. Every quarter, there will be a revision. And the government is very good to do a revision on the downside, but they have never done a revision on the higher side. They will say that I am open both sides, but I have never seen them going the other side. They only have got one side, which is downside. Again, when I made this slide, the bank FDs were 6.5%. Today it is 5.5%, in fact even lower. So I think as a few years back, only thing which has not changed is the life insurance policy, which has remained 6%, then also, today also.
Government has too much of money.
Yeah, the government can borrow also.
That's right.
They have got only one thing: beg, steal, and borrow. So if they cannot beg, they will steal. If they cannot steal, they will borrow.
See, I'm basically a non-resident, and I remember in the early days when India almost went broke because they didn't have any foreign exchange reserve. They were giving FCNRs at fantastic interest rates.
Sir, thankfully, India has changed, and today we are among the top countries in the world to have the highest reserves. Now, this has got two twinks here. See, every government has to do two things. One is I keep my reserves in terms of gold or assets, or else I can keep my reserves in form of foreign currency. And here, in case of foreign currency, I am talking about US dollar. I am not talking about any other thing.
Correct.
Other things are not making much sense to us. So India in early 2000s had taken a policy that instead of having a gold, I will better have my money being held in foreign exchange. So it was a good decision. It was taken in year 2002-3, Vajpayee's government, and later on the other governments continued with it. And today, the reason is today also we are continuing with that good policy, and I hope sense prevails. We continue this similar manner.
Yeah, that's why I said government has got too much of money. That's why they're not giving out interest.
No, government has got a lot of foreign exchange holding with them. And that is also because we as a country is growing, and we shall be growing at a similar pace for about another 20 to 30 years. We are all set to grow like this. We don't require any foreigners or anything. We as a country is competent. We as a country have got capital to do it right now. The markets have shown us that way, and Indian entrepreneurs are becoming better with the infrastructure where we were lacking in. We are going to which have now started being taken care of better in a better manner. We are doing well, and next 30 years belong to India. And if this next 30 year belong to India, then government will have more money, and we will have more money to spend for our poor people.
Yep. Okay.
And of course, one good thing about India right now is in the next 10 years, perhaps oil will become less important of a commodity, and Indians will be enjoying the sunshine, which others don't have. So they will still require, they will have sunshine for 4 months. We will have sunshine for 12 months.
Yep.
So Indians are very bullish about the solar energy, and I think this is going to be one of the important things. Europeans, Americans, they don't want solar energy. They will better like to invest in wind power. And for India, wind power is not the one, though we still have that kind of a thing, but solar is the answer for us. We have got huge solar energy with us. I don't think so many countries can compete us on that. Yes, so if we go to the next one, ELSS or a mutual fund products generally gives you a return of, I say, about 12%, but in the last 40 years, our mutual funds have given a return of about 16.5%, and that 16.5%, remember, is without the dividends included in it. Now, if I add the dividends also, in that case, 16.5% of a return will be higher. Now, next thing is, will we be able to sustain this 16%, 15%, or even 12%? I will say yes, for the next 20 to 30 years, we are going to be able to do this. Beyond 30 years, might not be the same with 15% return, but still, as a country, we will be growing at a higher speed. So every time we are looking into an investment, this one page should be in front of us to find out which return, what is the negatives, what is the positive, what is the returns. You should keep this thing in mind and speak to your financial advisor. Let him not say, dictate it to you that aisa hi hota hai. I have given a small page here. I think I'll not take much time here. So this is a compilation of if a person had put 70,000 rupees every year starting March 2000. Sorry, March 2000, and in a provident fund, and putting the same money into a Sensex. I'm not even saying a mutual fund. I am simply saying put it into an index fund. And what has happened? The second year he put 70, 70, 70. So every year he is putting 70,000 rupees. Later on 1 lakh, 1 lakh, and last 2 years 1 lakh 50, because that was our limit into our 80C. So what he has done is he has grown 70,000 to 1 lakh 47,000, 2 lakh 31,000. 322 till here he has made 30 lakh 50,000. So provident fund makes money for you. Your investment of 15 lakh 60,000 has become 30 lakh 50,000. So you have made money. The government is happy. You are happy. Everybody is happy. Kolkata people are happier because Kolkata people want to invest in fixed interest products. But if the Gujaratis have done it, they will put the money into an equity share or Sensex. Now what has happened? See, your money 70,000 rupees next year has become 1 lakh 3,000. You have put 70,000 plus 70,000, 1 lakh 40,000, but your money has become 1 lakh 3,000. Next year you put in another 70,000, so 2 lakh and 10, but your money is only 2 lakh rupees. Next year you put another 170,000, so your money is 2 lakh 80,000, but what is your return? 2 lakh 46. But because the markets did not rise for the first 4 years, the next year it plays a catch up, and your money is 6 lakhs 80,000, 12 lakhs, and 23 lakhs. So remember one thing, never ever try to time the market by coming out of the market and going in at a wrong time. If you are a disciplined investor, you are patient enough, you will be making the money. In the wrong time, keep investing. In the right time, keep investing. Wait for your investment goal to happen. Now let's see what has happened here. Here, the investment money, the same 15 lakh 60,000 has become 1 crore 4 lakhs. Now, if I say that, okay, 1 crore 4 lakh, too high, I will not be getting it. So let's reduce it by 30%. 70 lakhs. How much are you getting in Provident Fund? 30 lakhs. Let's say, let's reduce the total earning by 50%. How much are you getting? 50 lakhs. It is still higher than 30 lakhs. Let's say I am reducing it by 60%. You are still getting a return which is higher. So one thing very important here is patience and a long-term investment. Never invest into equity when you do not have this kind of an horizon to be invested in. Here, this person is making money because he has invested for 16 years. If you had invested for only 4 years, then you would have lost your money. Yes, sir. I think I have got a hand here.
Right. One question, all this comparison, what about real estate as an investment option? And
What about?
real estate? The same, I purchase a building or something, right? What will be the scenario in that case? And what should be the optimum asset allocation? Because I believe everything in the equity is also a little like, what do you suggest? Like, what should be our
No, I am
percentage?
not saying you should put every money into equity. That is
Right.
the last thing I will be suggesting you. So don't never do that. You have to be putting the money into equity, which money you do not want to take it out for next 15 years. See, you have the option of taking it out. But what I am suggesting is you do not need to put this, need to take this thing off.
Now, so if I have 100,000 rupees, like what would you recommend in terms of investment, in terms of percentage, where should I invest?
Sir, today, after the markets have fallen by about 6,000, 5,000 points, I will be simply telling you to go and put it for 5 years into equity. And if you've got less than 5 years, I will say you put it into a bank FD.
Okay.
Now, if you don't want to put it in the bank FD and take my suggestion, I will say that, okay, in that case, let's do a hybrid equity fund and not do 100%. You will get at least 2% higher than your bank FD rates.
Okay. And what about real estate as an option here?
Yeah. So now coming back to the real estate in India, I will say you should buy a house, stay in that house, and never buy a house which is under construction in India. See, we are not an US country where the government and the court will put the builders into jail. No, they are not never going to go to jail. We are only going to that Sunny Deol's movie, if you have seen, Tariq pe Tariq pe Tariq pe Tariq is what is going to be our point. So you should buy a house which is already made, buy that, see that, look at the location and go and stay. Now, why am I saying this is housing in India is not a regulated business yet. And whatever I am talking about here is a regulated business. So bank, when you put the money in a bank, is it a regulated business? Yes, it is a regulated business. Who is the regulator? RBI is the regulator. When you talk about a mutual fund, yes, it is a regulated business. Who is the regulator? SEBI is the regulator. If you still say insurance, I will say it is regulated business. Who is the regulator? IRDA is the regulator. But tell me, who is the regulator for real estate? And why do we not have a regulator in real estate? Because all the people in the parliament are the builders. Why will they have a regulated business here? So there is a golden rule, and who has the gold make the rules.
But Professor Bhaduri, what you're saying is, say I have a house where I'm staying.
Yeah.
Question is, should I invest in another house or flat as an investment?
Never ever do that, sir. This is the last thing I will be. See, you need a house. Every person needs a nest to stay. So that there is no compromise on that. You need a house to stay. You cannot go about hopping houses to houses. But if you have got the money, never ever put it into another real estate until and unless you have got 40 crores, 50 crores or 100 crores where you do not find that, okay, 2 crores here and there, I don't matter much. So people will keep buying properties where they generate a lot of black money and they want that black money to be invested at some place.
Correct. Okay.
Now, if we are not into those category, then we should not look into. Now, remember, we had a COVID last year. People were dying. If somebody had a mutual fund or a bank FD, he could have gone to his bank or mutual fund, redeemed his money and paid the bills in the hospital. Can you sell your house to do that?
You can't?
You can't. It is not as easy. See,
okay. Yeah. The problem is
See, the problem is if you are in US. See, thing is, if you are in US, you are in Canada. I am not very sure about Europe. I've got my family in these two places. So I will be saying there, when you buy or sell a property, you have to auction it through a website and have to enter it into the system. Here, there is nothing like that. You have to just find a broker and he tells you what is the rate and say that nobody wants to buy it. Correct. Sir, I am doing a favor by finding somebody for you. So for me,
So why I'm saying is,
Yeah.
when I was young in the 70s, I was well, property in Cuff Parade, Mumbai was being sold in flats for 1,100 square feet flats were going for 1.5 lakhs. Today, that same property in Cuff Parade, I don't know how many crores it has become.
I will be saying, sir, just like this, that 100 rupees of 1979 in mutual fund today is what, 60,000 rupees.
Yeah.
So the values have increased. But I will also be telling one thing, that remember 1970s, there was no builder, there was no nothing. We were only dependent on the government. There were no loans, nothing. Look at today, what is there? It is a surplus housing which has been created. Buy, but nobody has the money to buy. And even if you have got a money to buy a house, what is the rent are you expecting? Less than 1%.
Yeah, that's true. Renting out is not an option.
And renting out is not a feasible option. And
Yeah.
second thing is, you are having a depreciation on these houses. And if you're buying a flat, then God help you, because after 99 years, it is on a leased land. So after 99 years, the builder is going to have that land again to rebuild and sell it to your grandson.
Right.
But I will still say, if you can buy some land and hold on. I am not saying that the goons will come and capture. That is not a monetary thing. Then in that case, it is a good option.
Okay.
So if you can buy some land, because land is, see, you can go vertically up, but you cannot, as a land there, that is limited always. Otherwise, why would the Russians try to come into Ukraine? They have got a plenty of land in themselves. But they still want Ukraine.
Yeah, that's a lot of other interest in Ukraine. Very rich.
Maybe
Very,
on a joking front is, I said that you want to occupy something adjacent to you and you don't want to go vertically higher.
correct.
Now, this is for your children. If somebody younger here, younger than me, I am 50-year-old. This is for your children. This is for yourself, which I am going to say. You can start at 25 years. So this, I've got two brothers here. One starts at 25 years, one is 25 years old, another is 30 years old, and both start with investing 5,000 rupees a month. So they want their money at 55 years of age. So one is 25 years old, another is 30 years old, and both want to be investing their 5,000 rupees a month till they are 55 years of age. So one invests 18 lakhs because he has got 30 years, and the second invests for 15 lakhs because he has got only 25 years. So 30 to 55 is 25 years. 25 to 55 is 30 years. So imagine the difference in the amount. It is here on the first slide, the amount difference is 18 lakhs and 15 lakhs. The investable amount difference is 18 lakhs and 15 lakhs. But how much is the amount difference at the end? One is getting 2 crore 21 lakhs, the other is getting 1 crore 13 lakhs. So it is not the amount of money you invest, it is the time you spend in the market which is more important. And that is where your financial advisor should always speak to you and talk about how much time are you going to give me and not how much money are you going to give me. Here I'm throwing the floor open to anybody. If you gift your grandchildren 25,000 rupees one time at that grandchildren's retirement, which is 60 years, what is the amount you will get? A wild guess. Just do a one-time investment of 25,000 rupees for your grandchildren or birth of a child in home. अरुंधति के लिए मैंने ये बोला हुआ है 25,000 rupees one time. ये मनीष सुनता नहीं है अरुंधति, ये सुन नहीं रहा.
नहीं सुन रहा है.
नहीं सुन रहा है. मैंने बोला है 25,000 rupees इन्वेस्ट करो, वन टाइम करो और भूल जाओ.
She should be actually doing for a child, not for the grandchild.
Yeah, he should do is for his child.
Yes,
25,000 rupees one time. You know what's the amount she is going to get? 10 crores.
when the person retires at 60, correct?
Yes, and I am saying on the other side, whatever the father and the mother is going to do in a normal manner, let them do. Whatever the child wants to do, let them do. Do a 25,000 one time and forget, na. That is going to add 10 crores to the what you have going to do. And don't tell me you don't have 25,000.
And this 25,000 that you're talking about is to invest in equity.
Yeah, invest in an equity mutual fund, good mutual fund, and forget it, and let the child withdraw at her retirement.
See, Arundhati, you have heard it. 10 crores for
Yes,
your
I've heard
daughter.
it.
10
Yes, I've
crores for
heard
your
it.
daughter when she retires.
Yeah.
Yes. So I will say grandfathers and grandmothers, you should also be
Yes.
doing it for your grandchildren. Let them remember you as a legacy
Interesting.
when you are not there. Okay, one most last slide is what I will say is India is full of money sharks. Please don't fall prey to it. Somehow I have got these slides made from the TV clips. And you have got Sharda scam in front of you. So I need not be elaborating on the Sharda scam or anything similar, but I will simply be saying regulated business much more important than anything. Remember my one-liner. I always say, remember my one-liner. Return of capital more important than return on capital. I will repeat it. Return of capital more important than return on capital. So please, if you are going to get a higher return, don't run after it. Remember, return of capital is more important than return on capital. Return off is more important than on. So a very important slide, please don't miss it. I know that you people are already at a Helpage India kind of a position. I explain a lot, but here you don't need it. And I will be saying, least don't go to the bank for your financial managements. They are the worst people in doing it.
I agree with you. Totally.
And 19 years I have been doing this. So somebody told me, "So chuhe kha ke billi haj ko chali." Somebody in one interaction had told me that I have been doing this thing for 19 years. And after 19 years, Kausik has become a professor. He has joined academics, and now he is giving these things that banks mein loota jata hai. But yes, what can I be doing? Yes, I have done it, and I regret. But that was my job. What can I be doing?
No, I agree with you. This has happened to me also. They always give, because they are trying to sell something that they want, they're going to get money out of. That is why.
Yes, and they always sell you a product which is the highest in the brokerage part.
Correct.
You don't need it, yet you end up buying it.
And
Next,
I
what
think,
happens is,
I think, Dr. Bhaduri,
yeah,
sorry to interrupt. I think the worst you can do is to invest in ULIP.
yes, the worst thing is to do and invest in an ULIP. And another thing is, there is nobody to monitor your funds. See, in today I have sent. I'll just read my. I'll read my WhatsApp today morning sent to all my clients. I'll just read it. Important information. Nimesh Chandan, who was previously heading equity team at Can Robega Mutual Fund, joins Bajaj Finserv's upcoming mutual fund company as a CIO. Under Chandan, Canara Rubago was small, but one of the best managed mutual fund AMC, not only into equities but debts too. Without taking undue risk on their equity portfolios, they had been delivering consistent return and remain among the top performing equity schemes despite their smaller size compared to the larger competition. We means my clients, we have a lot of our investments in Canara Robago top performing schemes. Canara Robago is a process centric AMC. However, at My Money Investments, this is my company, we shall closely watch, track, their responses to the new developments within their AMC and changing market dynamics. We shall closely watch their leadership change issues and how they perform under a new leader. I shall keep you posted. For further any queries, please feel free to call me. Now, this is what I have been telling it to my clients, and this is what is expected from your financial advisors also, that they are able to track the movement of the fund manager and the top ranking officials whenever they are moving out. Because ultimately the fund manager moves out, he takes with himself whatever good things was going on to a new fund, and somebody who joins in may not be of the style which you are interested in, and hence working closely with your financial advisor becomes a very important thing. So please spend some time with your financial advisors. So closing it off, I'll just say one thing here. Investment is not gambling, so please take it seriously. It requires a lot of studying, patience, perseverance, and hard work. We try to find value in something which is cheap today and reap profits out of our investment. So never ever think mutual fund or money investment is gambling and I should gamble. Beware of the quick rich schemes. Ultimate, they lead to pain and losses. Think of a goal before you start investing. Look for a reliable financial advisor who can navigate your investments during uncertain time and guide you to your goals. Be an informed investor. So my brand is stop guessing, start knowing. So that is what I write always. I will end here with one last. I don't think so you will be able to listen to it, but let's see what they say. How old you would be if you don't know how old. Let's see a small quote. So thank you very much. This
Thank
is
you
a
so
small
much.
clip from Flipkart, which is talking about there is no age to learn a new skill. So it is one of my favorites. All my presentations, I end with this clip, and it gives me happiness too. Thank you very much. I think I've addressed most of the queries while I was taking the session. In case any question and answers for your anything personal finances are there, you can always speak to me, or else you can just take down my email ID. I'll be happy to be answering you anything.
Yes, could you please put your email ID, contact number in the chat box? So
No,
that,
it is already there. It is on
it's
the
already there,
screen.
okay.
It is on the screen.
Okay, okay, great.
I have a question. This is Shubhajit Rai here. I
Yeah,
have a question, Professor Bhaduri. This is a little different from what we have been hearing for the past 1 hour. Can you hear me?
yes, I hear you loud and clear.
Yeah, okay. So, you know, the new ecosystem of startups having come up in a big way, and they are also looking for investors from different sources. And there are a lot of private investors which they're also looking at because of the obvious reason of funding from a government or financial institutions. So they also look for private investors. So what are the 5 things, or maybe the what are the main things that a possible investor should look into who are trying to get into the startup financing is concerned? Because this is also a kind of investment that a person or maybe a group of individuals may make for future gain. So what are the things that they need to look at, the promoters or the people who are actually promoting a startup, to actually feel secured? I know it cannot be 100% foolproof like any business, but what are the basic criteria that they should look at?
Yeah. Sir, to start with, I will say, are they really looking at us to be investing in their businesses? They are not looking at us. Now, who are they looking into? Correctly, they are those people who can invest 50 crores and above. Now, are we into the group who is 50 crores and above to invest in somebody's businesses? If it is less than 50 crores money with me, I should not even look into any dangerous kind of an investment. I should better be investing in something which is regulated, is being observed, and within my control to come out, go in, step out, add, subtract, and do anything. Now, if I've got money, say over 100 crores, and I do not mind placing my 10 crores into somebody else's business because it is going to give me a return, which is say 20 times of my investment in 10 years. And if I lose the 10 crore rupees, I don't lose my sleep also. If this is the thing, then you should go ahead and do it. Remember, the funding, when they come from abroad, they are dividing their money by 76. You are not. So if an American is investing a million, say 1 crore rupees in India, 1 crore rupees in US earned is peanuts for him. Not much. But remember, if you put your capital of 1 crore rupees at stake today here in India, it is a lot of money. So it is the people outside India who will be investing in Indian startups and anything. 50 crores and less, never look into it, because we have 50 crores in India is not even rich. If you've got 100 crores plus and can forget 10 crores, go ahead and do it. Now, once you are 100 crores and up and go ahead and do it, then point number 1, you have asked me for 5 things. Point number 1, is this business you are investing in is something you understand and know? Personally, for me, I will say I invested my own money, small money, into a restaurant. I purchased a restaurant while I was a banker, a coffee shop, not a restaurant, a small coffee shop. And I thought that this is the extra money I have got. And then I quickly realized that I cannot even know how to make a pizza or a coffee. And if 10 coffee orders come and my chef is not available that day, I am helpless. And I decided that no, this is not the business I should be in. I should be in a business which I understand, which is money, and not put my money into a damn coffee shop where I don't understand anything about it. He is talking to me about 10 rupee cups, 12 cups for 50 rupees. And someday he's saying 12 cup for 45 rupees. And I don't even understand the difference between how much a cup could cost me. So first point is never ever invest in something which you do not understand. Here you will not get help. Here he will be presenting the cases into an Excel and make you believe. Now, do you want to be believing his Excels? Second, if you do not have a team who can go into the balance sheets, profit and loss account and put them into their board, never ever think like that. So when somebody is investing a lot of money in Paytm, remember they have put their directors into the board of Paytm. Remember, they have put a research team into doing all the things which Paytm is doing. Remember, they are calculating their ROI on a daily basis. Remember, they are speaking to the owners of Paytm on a daily basis or quarterly basis or monthly basis, but some basis is there. Remember, they are comparing their return with another competition. Will you be able to do it? In case you are able to do it, fine. Well, good. You can do it. You can go into the board. But if you cannot be doing it, in that case, do not go to that kind of a thing to think that I will make money out of it. You might get a lot of experience. You can do some charity by helping something, but I think business is not charity. So if you don't understand, don't do it. If you cannot put people on board, don't do it. If you cannot read their balance sheets, put a team to, then don't do it. Next, whatever you have financed, if double of that money is required and you are unable to finance it anymore, then this is not your business. So suppose you have put in 5 crores, they are looking to sustain themselves. They are looking for another 5 crores from you. And you say, ki, no, I cannot be putting another 5 crore. You go to somebody else. In that case, this is not your business. So don't do it. And finally, remember, out of the 10 projects where you are investing 5 crores each, 98% is going to die without making money. You are only betting on that 2% of your investment to not only recover whatever you have put in the 98, but give you more. So who will be the people who will be investing? They are filthy, 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 filthy rich. So Tata's does it. The sovereign funds do it. The private funds in UK, USA, Canada do it because they have got hell lot of money. 1,000 crores, okay, I can put 1,000 crores. But for a individual investor putting 5 crores, see, sometime back, a company had hired me to be a consultant to look into the balance sheets. That means they were asking people to be investing into the new businesses which are coming. So they were a consultant. So they had hired me to say they wanted to hire me to look into the balance sheets and look and tell them that is it their feasibility of doing. I decided that this is not my game, because ultimately a lot of money, 98% of the people will lose money. And they are saying, see, 98% of the people will lose money and 2% will make a hell lot of money. And I decided that I don't want to be in a business where 98 people lose money making it for the 2. So that business, I didn't want to be a part of them, and decided that this don't work out good with me. So if these answers are good with you, you can go and invest. If these answers are not okay with you, there are many other places which makes money for you, reasonable money for you, good money for you, without putting your neck on line.
Thank you.
So, any more questions?
I think, President, do we have any more time?
And actually, no. But if you have any questions, you can ask. You can go ahead and ask. Anybody else has any questions to ask?
Yeah, I have got one thing. Manish, you should share my email ID with everybody. I don't think so. My email ID has been here. Can I open the chat
No,
box and write it?
Yeah, you can do it
Yeah, yeah.
there. You can write
Okay.
it down there, please.
You can put it in the chat box, yeah.